After reading lots of financial book and after investing in the stock market, I decided to make this video on 3 things you need to know before investing in the stock market. There are lots of money in the stock market. You can make some passive cash in the stock market, and also you can lose some cash in the stock market. So if you don't understand some of the principles that guide the stock market or some basic things you need to know as an investor, then you are your way to losing some cash in the stock market. And in today's video, I'll be telling you some of the things you need to understand. So if videos like this interest you, do also hit that subscribe button as we keep bringing you ways to go about making some cash online. Now, the first you need to know is that you need to know what you are buying. Now, when you buy a stock, you're actually buying an ownership in a particular company. You need to study the company for a period of time, or you need to know those that run the company, the CEO, those are in the board, and how much they are making as revenue. You should not go about buying a stock from a company because it was hype or recommended. Even if it was recommended by a stockbroker, you should do your own diligence to go about seeking information on this company and also some things you need to understand about the company. You should know what the company is selling. You should know the basic things like how much they are making, if they are better off this year than last year, or if they are better off last year than this year. All this information would guide you on going ahead investing in the stock market. Now, if you want to invest in Apple stock, you should not invest in Apple stock because of they are producing iPhones. You should invest in Apple stock because of they are making profits. That's the goal of investing. Because if a company keeps making profits, your stock will keep going up, your capital will keep appreciating, and you make some profits in the stock market in a short period of time. But if the company is not stable, your stock can just nosedive and you not really make some profit. So do all to make some research about the company before going ahead giving your funds to that company in form of investment. One secret I'll give to you before investing in the stock market is that you should not just go investing in big companies. You should not see it that Apple is so big, I want to invest in Apple. There are some smaller companies that can give you a good return on investment than all those big companies. Let's say you invested $300 in Apple. Maybe after a year or 2 years, you can just get $350. But there are some smaller companies you can go as much as getting 100% of your investment. That's if you invest $300, you get as much as $600. Yeah, there are some Nigerian companies that have done 100% in just a year. That's one good thing about some of these smaller companies and startups. So you should not just invest in big companies. You can also invest in small companies, but do also make some research before investing. The second thing you need to know before investing in the stock market is that you need to know the trend. Now, there are some industries that are thriving in some particular period, and there are some industries that are not thriving in a particular period. We're in a period where lots of people are talking about the Web 3.0, and we're in a period where people are talking about the AI. If the company you want to invest in is not following the trend, you should be careful before investing in that company. Let's say you invested in BlackBerry before the iPhone came out and you don't want to shift your investment into the iPhone. You could see that all of a sudden BlackBerry is no longer there on sale because they did not follow the trend of smartphones. So you should always check the trend, know what is trending at the moment, and you should invest in what is trending. There are some things that will trend for a short period of time. That's not really what you want to invest, because when it comes to investment, it's in a long run. You should leave it for like 5 years, 10 years. Now, the third thing you need to know is that you need to know your risks. This is very important. The stock market can be very much volatile. You can invest now and you can lose your money. You can invest now and you can get lots of profit. So understanding the volatility of the stock market will make you make some decisions. Do not invest in money you cannot afford to lose. If you want to invest an amount and you're afraid if you invest this amount, you'll not find your rest, do well not to invest that type of amount. Do well to understand the risky part of the stock market. You can diversify to reduce your risks. Let's say you want to invest 100,000 naira. You should not put all of that in one stock. You can put it in different stock, so that if the stock does not perform well, you can use the other stock to complement it. So do well to diversify if you are not willing to take some risks in the stock market. But if you are not really willing to take risks at all, then don't invest in the stock market. Other investments you can invest in, the FGN savings bond, you can invest in treasury bill, you can invest in commercial paper, and some other low risk investments out there. So these are the things you need to understand before investing in the stock market. Do also drop your comments in the comment section. If you have any questions, don't forget to hit that subscribe button as we keep bringing you ways to go about making some cash online. Till our next one, peace.